Since we were talking about IT companies, as you said, I mean, the going has been very good, and we have one such company joining us. Cyient held its investor day last week, in which it committed to achieve the $1 billion revenue target by FY24 and maintained its 13 to 14% organic growth revenue guidance for FY23. But this is something that they had discussed in their earnings call as well a couple of weeks ago, maintaining their revenue growth of 13 to 14%. So let's find out more. We have with us Krishna Bodanapu, the MD and CEO of the company. Mr. Bodanapu, good morning. First, I just want to understand, at this call yesterday, or the investor meet that you had, was it any different from what you announced in the results? Because you had talked about meeting that $1 billion guidance and holding on to your revenue guidance for this year as well. Any changes in your strategy?
So good morning, and thank you for having me here. I'll just clarify that $1 billion number that we talked about was a run rate number, so not necessarily $1 billion in FY24, but a $250 million quarter in the second half of FY24. So with that clarification, I'll say, while in the investor call every quarter, we talk a fair bit about numbers and we talk about sort of the outlook for the business, which has not really changed. But I think what we spent a lot more time on Friday on the investor day, which was an in-person event, was actually demonstrating the capabilities that we've built, and more importantly, sort of the how we're going to get to those numbers. Because I think that is the key, is not just the what the numbers are, but really how we're going to get to the numbers. So we spent a lot more time demonstrating on the capabilities and competencies that we've built, and sort of the strategies, both from an operational perspective and from a business perspective, on how we're going to get there. So I think a lot more emphasis, given that this was an 8-hour, 9-hour event, a lot more emphasis was on the how, rather than just the what.
So maybe it's a little unfair, but I'm going to still ask you to do it. 8 hours into 3 bullet points. What is going to be very different, going forward to get to this run rate that you outlined compared to what you've been doing so far? Very briefly, Krishna.
See, there's 3 things, right? One is we have to strengthen the core, which is essentially what we do. We have to do better. And that's where a lot of the operational excellence initiatives, and I won't get into the details, but operational excellence comes in. The second thing is there are immediate areas of growth like digital, embedded software, etc., which are a bit new to us, just given that where our core focus was. But we've invested quite a bit over the last 3 years on them, and those are really providing the growth for us right now, including some of the new markets such as automotive, semiconductor, and medical. So the second thing is look at adjacencies, invest aggressively, and really monetize that investment. The third thing is what we call megatrends. These are the 5 macro factors that are driving the change in the business, things like sustainability, connected or 5G, and so on and so forth. These will really show results in the next 3 to 5 years. So the third element is to invest in those now. So 3 to 5 years down the line, we're very well prepared. So it's strengthen the core, invest for the adjacencies, and really then accelerate towards megatrends. Those are the 3 bullet points, which is really how we're getting to the execution.
Good morning, Mr. Bodanapu. I wanted to ask you about a couple of these segments. You have told us, even when you joined a month or so ago, about the railways business. There's a good scope to grow out there. I think it's mid-single digits, automobiles as well as healthcare. So what's the trajectory on these segments? Because I think there's a good amount of a tailwind for these industries. In turn, it could be more good business for you. Go ahead.
Absolutely. These are 3 segments that we are quite keen on. Of course, rail is something that we've been doing very well for the last 20 years. Of course, there's been a slowdown, but like I think I mentioned in the call also, we've hit the bottom of the rail industry, so we will see some growth. But of course, it is a relatively large segment for us, so it's not going to be spectacular growth, but at least there is stability on the rail industry. But healthcare and automotive are 2 industries where technology-wise, there's a big shift that's happening. The adoption of some of the new technologies, etc., are happening in a rapid pace. And I think, while we were a little bit late to the automotive game, we were always quite present in the in the medical devices game, which is a part of the healthcare segment. And really, we're pivoting on that to see the growth. And automotive has been one of the fastest growing businesses for us. And similarly, healthcare, I think both of them doubled almost compared to the year ago. So I think we've picked the right segments. And even in automotive, while there are other players who are established better, but we've won a lot of business in the last couple of quarters, even against the more established players. So we believe that growth will continue because of the change in technology. Our experience in some of the other industries like aerospace are actually becoming very relevant in automotive.
So in terms of numbers, so for healthcare and auto, in terms of numbers, do you think you can achieve this $100 million revenues for both these businesses together? And if yes, any kind of timelines that you would have for this?
It's a 3-year time frame that we're aiming to get there. But we have we have enough of an order book, we have enough of tailwinds behind us that we're quite confident we can get there.
And Krishna, margins as well, are there enough levers there to kind of lift margins higher?
Yes, absolutely.
And to what levels? I mean, again, if you can give us some sense of that.
We believe that our steady state margins are 15 to 16%, which is what they will be next year for sure. But there is a clear roadmap to how we will get there. I think there are a number of levers that we've talked about in the past, but definitely, our margin is a little bit lower than the competition in general. But we're quite clear that where the levers are, we've had to make some investments, especially into some of the newer areas that we needed to grow in. But I think some of those are actually getting monetized, and we're able to pull back on a lot of the sort of initial investments. So I think there is enough levers in that we will get there.
Okay, all right. Good to see that you're focused on margins and you're looking to expand it from current levels. Final question, Mr. Bodanapu. I recall when we chatted last time, you said the DLM business, everything is on the table, whether it's an IPO, bringing in the strategic investor, you all will decide sometime in Q3. We're halfway through. Could you tell us which way is this heading? Towards an IPO or a strategic investor could be coming in?
We're still evaluating the options, and I think obviously given the sensitivity, we can't talk about it or speculate about it. So I just say we'll still stick to the Q3 timeline. Like you said, it's half is done, but the other half is there. So we'll stick to the timeline. We're working quite hard on that. That's a high priority, but we're looking at all the options.
So just one clarification. You said earlier on that you're going to reach this $1 billion revenue target, but not by FY24. Is that what you had spoken about earlier as well? Because I was going through some notes where you did mention earlier that the timeline is FY24. Did we get it wrong?
No, I said the run rate was FY24. And I clarified last time also that meant that in 250 million quarter in FY24.
250 million. All right. Okay, got that. Thanks a lot for joining in, and have a great year ahead until we chat again. That is...
Thanks for your time.
Thank you. Thank you for being with us. That is Cyient.